Wrong stimulus. Alan Wade.
Is now joining.
The July 12th, 2022 Memphis City Council meeting is convened and now back in session. Please, Sergeant at Arms. Thank you very kindly. Madam Comptroller, please call the roll.
Thank you, Madam Chairwoman. Council members Canali, Carlisle, Colvett, here. Easter Thomas, Ford, here. Johnson, Vice Chairman Jones, here. Logan, Morgan, Smiley, Robinson, Warren, present. Chairwoman Swearingen,
present. We do have a quorum.
That is correct.
Comment cards are available for members of the public wishing to be heard on a specific item. Our Sergeant at Arms has agendas available up front. Please be mindful that all cards must be completed in their entirety, including the item number you wish to speak on. Cards that include a topic are left blank will be held until the end of the meeting for general comments sections. All those wishing to speak on an item must turn in their comment card to the Sergeant at Arms before the item is called. As chair, I will only recognize citizens that properly registered to speak by submitting a completed comment card to the Sergeant at Arms. Please be mindful that all of us must abide by the rules of decorum during our council meetings. And one housekeeping item, please remember to silence your cell phones. Councilman Warren, you may be recognized at this time.
Madam Chair, I'd like to have a point of business addressed. I would like to motion that we reconsider the vote for same night minutes for add-on item number 38, which is an appointment to the Community Redevelop Agency. That was not supposed to have been same night meetings at the request of a chair during our conversations in committee, and by mistake I let that pass through. So I would like to move that we just move that off of the same night minutes agenda and let it pass through normally. And I need a second.
Second.
Okay, it has been moved by Councilman Warren and seconded by Vice Chair Jones to remove item number 38. Are there any objections? Without any objections, that item has been removed. Thank you very kindly,
for letting me fix that.
Madam Comptroller, please call item number 37.
that would take us to item number 37. Item number 37 is a resolution for Economic Development Initiative, One Bill Convention Center Commitment, District 6, Super District 8. This resolution is sponsored by council members Ford Sr., Robinson, Morgan, Smiley Jr., Johnson, Canali, and Warren. And there is a request for same night minutes.
Thank you very kindly. Councilman Ford, you are recognized.
Thank you very much. What we're going to do right now, I'm going to have the city to come up and they're going to do a little talking. Then I'm going to have the applicant come up. We're going to do it that way. You got a card?
Yes, sir.
Okay. After everybody's finished, then we can take a card, okay? Before the vote, I'm going to turn the floor over to the chief. Before you speak, I want everybody with an open mind today, okay? Very open mind, please. Can you hear me now?
Yes.
Okay, everybody, I need y'all with open minds today. This is very important. Okay, go right ahead, Chief.
Thank you, Councilman. Thank you, Madam Chair. Doug McGowan, the Chief Operating Officer for the City of Memphis, 791 North Graham Street. We were here on Tuesday, and I talked a little bit at the beginning about this entire development of One Bill has been, it's an important location for our city. It's an important development for our city. And we have worked very hard to help bring the development to this point to fruition. And I think it shows in the investments that the administration and the council have made together. Just to remind you, to this point, The overall project has been awarded a 30-year payment in lieu of taxes. That's 10 years longer than we typically do, even 15 longer than the standard 15-year. It's been awarded the 2.25% local option sales tax rebate. So in other words, everything that's sold on premise is rebated to the project to help pay for the debt. Part of this project was the impetus for us to get a 5% TDZ surcharge that the developer can charge on top of the local option sales tax that is again rebated to the developer for the payment of debt that is part of the project. And then I came to you in April when I think the market started to shift and we actually put a 50% backstop on the debt service for a portion of the project. As you know, there is some public meeting space there that will be helpful to the overall hotel development. That public space will be funded with bonds that are issued by Center City Revenue Finance Corporation, and that's the debt that we are backstopping 50%. Not the whole development, just that portion, which are the meeting spaces and common areas that will be helpful for the convention center. The local option and the 50% backstop are unprecedented. The 50%, or excuse me, the 30-year pilot is unusual. We've only done that on very rare occasions. More than that, based on the developer's desire for the entire area, as you know, we're parking constrained. The Memphis Light Gas and Water Garage was encumbered with many state employees, so we went to the State General Services Agency. We asked MLGW, they broke the contract with the state. We moved 400 state parking spaces up further away from that space and broke free 400 spaces in the MLGW garage to allow this development to go forward. There are other things that we've done to try to speed this development along, including some utilities movement and those kinds of things. So we are invested in this important project. And today, what you're hearing is a request to go beyond what we've already done. We clearly understand that circumstances have changed in the bond market, and we're sympathetic to that. But the administration, obviously, this is not the only issue that we're facing. We have other commitments. And frankly, this change to a higher percentage of backstop is to be weighed carefully. Today, you're going to be asked to increase backstop to up to 100% of the debt service on that single portion of the debt. Should you approve that today, remember the next steps are that you're authorizing the mayor to enter into an agreement for that debt service replenishment. The administration is not ready at this time to enter into that agreement without, again, talking to the state comptroller. We've spoken with him and we know what his position is today. Without actually reaching out to our rating agencies, S&P and Moody's, to find out, will there be downward pressure on our credit rating? And as you know, we have together worked very hard to do things to keep our credit rating at our AA stable outlook, which is important for our ability to borrow money for other things. And it took us a while to get here. And you'll recall this year, Ms. Ford and I actually went to the credit rating agencies and asked them for an upgrade because of our financial due diligence. And they declined to do it, citing not financial management by the city, which they lauded, but by external economic pressures. That was the reason why we weren't granted an upgrade. And so we want to protect that. I think the mayor has corresponded with you that we are not unwilling to continue the conversation, but we need to understand, based on current and future potential commitments from the city, what this increased commitment does to either reduce our future borrowing capacity or to put pressure on our bond rating, and to make sure that what we do is consistent with what the comptroller has told us. And as you know, we've built that relationship over the last 6.5 years so that they have confidence in what we're doing. And so for those reasons, I'm sorry to say, Councilman Ford, you asked us to go see if we can't get a deal that we could bring before you. I've been unable to do that. As much as we have desired and tried to do that, and I think the mayor shared with you some of the things that we've put forth, offering a loan for some of the debt service replenishment instead of going to 100%. And that just wasn't feasible, according to the developer's numbers. That wasn't feasible to help get the deal done. And so that's where we are today, is that we understand how important this is. We understand that we don't have a lot of time, but it's our responsibility to look out for the financial best interests of the city as a whole. I'll say it like this: I do not have, and we do not have, as some operations have, the ability to segregate our financial interests into, to protect one part or another. We are one large organization, and every pressure that we have is something that we have to respond to. So there really is no protection from other non-ad valorem pressures that we would have, or the ability, should these bonds not be fulfilled, that all of our non-ad valorem pledges could be called upon to pay the debt service. So there's a lot of risk. And again, I want to come back and say this project is important. I would love to be standing before you to say we have a deal. I'd love to be standing before you to say, let's walk on down the street and cut the ribbon or break ground, but we're not there yet. And so that's what I just wanted to pass along to you, that whatever the outcome today, if it's an affirmative vote for what's presented before you, the mayor, you're authorizing him to enter into that agreement, and he's just not ready to do that at this point. So I think I'll reserve time for any questions that you all have. And I'm happy to come back up, answer questions now, or if you'd like to hear from other folks. I think we did provide to you the letter of opinion, and realize the letter of opinion from PFM, who's our financial analyst. Given the information they had, I think our letter the initial draft came to us at 11 o'clock last night, so they've been working around the clock on this. So it's the best that they could produce in the time allotted. So I'll stop there.
Thank you very kindly. I will yield back to Councilman Ford.
Chaz, we're gonna want you to come up, and then we can take questions. Everybody can talk after that if you want to. Is that okay?
Yes,
the council
Councilman.
need to ask?
Councilman, prior to doing that, we have some individuals in the queue that would like to have some questions
Chief
asked.
First,
Yes.
okay.
Councilman Warren, you may be recognized.
Thank you, Madam Chair. I just want to know, in the worst case scenario of this debt, let's assume that we proceed with this process. In the worst case scenario, we would owe how much debt? What's the total amount we would owe?
So, and I know Mr. Carlisle will give the details on this. There are, in the first few years of development, there's a protection. There's several debt service reserve
How many
funds.
years is that? Do we know?
I think about 4 years. There's
So first 4 years.
interest that pays during the period of construction. So, but that's true, and that was also true when we guaranteed the 50%. And then, should all of the hotels in development, all of the restaurants not produce, should they produce less than about 65% of their projected revenue, that's when the first amount of city, as I understand it, that's when the first amount of requirement would kick in for the city. In the absolute worst case, assuming no revenue, it graduates up from a lower payment to a higher. In the out years, it's basically $6.9 million at 100%. And what you've already approved, it will grow to $3.5 million. Again, assuming that there's no revenue coming from any of the other developments, and we're out of the other protections. The overall
Mr. McGowan?
is $161 million.
Okay.
Against about $80-some million of borrowing, you'd be paying back about $161 million with the revenues that are coming.
That's assuming 0% income Hotels busted. There's nobody coming to a convention center. We have nothing going on in Memphis, correct?
Yes,
Now,
that assumes no activity.
so
will
no
generate
activity. So
the
worst case
benefit.
scenario is $6 million a year,
6.9, yes, sir.
6.9. So $7 million a year if nothing happens, and that starts in 4 years, correct?
Well, it doesn't start at quite that level, and again, I'm not the expert.
Okay,
We have
well-
the bond experts here who can give you those exact numbers, but in rough order, it starts lower and then grows to that amount, assuming, again, no proceeds.
Okay, well, I want to go worst case scenario. I want to say it's starting there at 7. Now, it's 2026 that we have our debt cliff. Is that not correct?
July 1st of 2026, fiscal year 27.
July 21st. And at that point, we're expecting to see a $60 million drop in our debt payment. Is that correct?
About $50 million, yes, sir.
About
in
$50
today's
million.
terms, because as you know, Accelerate Memphis used about a little of
We
that
use
money.
we use 10 million of that for our Accelerate Memphis. So we're not going to have to pay any of this, worst case scenario, for 4 years. And it's 2022, so 4 years from now it's going to be 2026. So if things are really bad, we're going to have $50 million of money that we're not expecting to have, and then we can finance this at $7 million a year. I mean, we'd have to take it out of that $50 million, and that's what we would owe if we had to pay this. Worst case scenario as we move forward. And I guess in my mind, what I'm thinking, and correct me if I'm wrong, we just spent $200 million on a convention center so we could get large conventions into Memphis. We're putting a new dock in down for more boats to come in, and we need some place for them to stay if they're coming off the boats, to stay. I'm just wondering, somehow, how does this work that when we've got this debt reduction, that these financial geniuses that are giving us our, bond ratings, and I don't understand how that works. Why is that not part of their consideration, or do they just need more time to take this into account?
Well, we have our financial analyst from PFM here, but
Could they answer that for us?
Correct me if I'm wrong, but let me say it this way. I'll use an example. There are other hotels that have used this backstop methodology. And when the rating agencies look at you, they assume that liability is always there. So whether or not you're receiving revenues, if you're backstopping it, it's just as if you have to make that debt payment. It doesn't matter if you get twice as many revenues to pay the bonds, if you're still on the hook to backstop, the rating agencies say you still have a liability on the books and I have to consider it. Now, let me talk about the debt cliff for a minute. Why don't the rating agencies say, well, gee, you guys in 2026 are going to have a debt cliff? Someone has told me before in this audience, it was 7 votes, I can move City Hall to Tunica. So we can still screw it up from here. I'm encouraging us not to do that because that is a real opportunity for our city, as I've heard many of you say, to put quality back in and to provide amenities and quality of life and services and raises for employees that richly deserve them. So we made a very deliberate decision over about a 9-month to 10-month period of time before we decided to do Accelerate Memphis in full consultation and after having a full briefing with Moody's, S&P, and everybody who does ratings, the comptroller, and our financial analysts.
Mr. McGowan, on that, I know we did that, and that was good, okay? My thinking is, though, part of what we want to do is we want to see new jobs, and we want to see the investments that we put work. And I'm just wondering if, we're looking at this situation and thinking, oh my gosh, this, Chicken Little is here, the sky is falling, how do we make this work is what I'm trying to say, because it doesn't make much sense. I'm not a financial analyst, but knowing that's coming, and I think with this deal at 10 years, don't they have the opportunity to buy all that debt back and take us off the hook if they're making money? So it's not necessarily we're not going to be on the hook for 30 years. If this is making money, we're out of the deal. Is that not correct?
So there is a provision that at 10 years, they have to make best reasonable efforts or best commercial efforts to refinance. That is not a guarantee. And if they put that guarantee in there, at least as I understand it, that's the same as reducing the amount of the benefit because of the city's backstop. I'll come all the way back to the beginning. You're absolutely right, Dr. Warren. This is important for us. That's the reason why we said 30-year pilot. That's the reason why we did the very first ever rebate of local option sales tax. That's the reason why we did the 50% backstop. So all of those things accrue to the point that you're making. The question is just, we have had very careful deliberations and analysis about what those impacts are to get to those points.
How do we take it forward based on what you said and make this work? I mean, that's what I'm asking, and I'm giving, I'm looking at it from the perspective of that debt cliff, but it doesn't seem to me like this can't be a doable deal.
I'll tell you, our team has worked very hard. I know the Carlisle team has worked very hard.
What do we need?
If we could have found a way to get it done, we would have.
If you have more time, can you get it done? Is there some other information that you guys need that you don't have?
Well, the principal information that we need before the mayor can advance his signature on any guarantee is to make sure that he hears directly from the bond rating agencies what the impact is. And again, hears from the state comptroller, who was very clear in his comments to us that he takes a dim view. I'm using not his exact words, but takes a very dim view of 100% backstop. And also to determine what the long-term impacts are of our ability to borrow. So
if we can't do a backstop, what else can we do?
We offered today to prepay the debt service reserve fund by using essentially city cash as a loan that would be paid back. That was determined to not be feasible by the development team for a number of reasons, which I'll let them talk to you about, because I don't know the details of their side and what the development details are that would prevent that from being. They've explained it, but I won't try to explain their reason. But again, when I say we have tried everything that we can think of, that we can stand behind, we have done it.
So to get the information from the bond rating and to get the comptroller to sign off on this to feel less uncomfortable, is there something that we as a council can do that can help make that work?
I don't know that there's anything that the council can do today that will make that work. I do know that we shared with the comptroller our idea for pre-funding the debt service reserve fund, and he said, I can be supportive of that.
Mr. McGowan, is there a way we could have the bond person come up and talk to us? Are they here? Anyone from the bond rating agency that can talk to us here?
About Standard & Poor's and Moody's?
Mm-hmm.
Those are the people that rate, no. We have our financial advisors here. Lisa, you might be able to talk about that, or Pam, about what it takes for that, but.
That would be good, so we would know what.
They have to know what the fixed information is that they're evaluating. And as we've been negotiating, that it has changed a bit. As the market has changed, it's changing. So I'll let Lisa come up and.
Thank you.
By the way, complete latitude to correct anything that I said that was wrong.
Thank you, Mr. McGowan.
Hi, Dr. Warren.
Hi.
If you could please share your name and address for the records.
Sure. Lisa Lawrence with PFM Financial Advisors.
Thank you very kindly.
With Pam Clary, our co-advisor as well.
Do you have any specific questions that you would like to ask of them, Dr. Warren?
Yes, it seems like we need some bond rating person to look and tell us what they think the risk of this deal is and how it would affect our city's rating, so in our borrowing capacity. And I think that what's I guess affecting the comptroller, because he does not have that information. So if the comptroller had a ruling from a bond rating agency that said this is a reasonable business deal, I'm wondering, would that make a difference with his thought process? And how long would it take to get that bond rating agency to give us their opinion?
Sure. So the rating agency does have a process. It's called an indicative review. And so there is an opportunity to go to them with this bond structure transaction, which I need to say I'm not extremely familiar with. I just saw it 2 days ago. and the developers can speak to this actual structure. But there is a process amongst the rating agencies that you can go and ask them for an indicative rating. I just note that I have here the Moody's and the S&P criteria. Both of them have very specific sets of, or I don't have the criteria, I have your rating report, but they have specific sets of criteria in which they look at bond issues, as Mr. McGowan noted, on a worst case basis. So while we can talk till we're blue in the face about the likelihood of the city ever having to have a payment to the developer for this purpose, they will step back and say, I have to assume the worst case scenario and put the full amount of liability on the books. That then affects your bond ratios, your bond capacity in their eyes. It is what they will report back out to bond investors in their credit rating reports. And I can tell you on the very first page of this, the very first credit challenge that they cite here is elevated debt burden and fixed costs. And on the very third bullet of factors that could lead to a downgrade, they cite material increase in long-term liabilities, including continued leveraging of non-ad valorem revenues. So they have a spotlight on this. And as much as I would love to convince them that the likelihood of you having to pay on the debt service, they're going to ignore.
So they don't care that we're looking at $50 million in 4 years because they think we're going to spend all of that.
I can't tell you what they think.
Yeah, I'm just looking, and wondering where that comes from. But what will we have to do to go through the process of getting an official report from them?
That would be just simply going to them with the structure in hand, along with the other material information about the city and future plans, and putting it in a package to them.
And if we took that to them, it would take them 4 days, it would take them 6 weeks?
At least 2 to 3 weeks.
2 to 3 weeks. All right, thank you very much. Thank you, Madam Chair.
Thank you very kindly. Councilwoman Johnson, you may be recognized.
Thank you, Chair, for the opportunity. My questions are oftentimes about clarity. And due to the fact that how much time we may be spent here today to get information. If this body would approve this, would this resolution require the signature of the mayor before it could go forward?
Who are you addressing your question to?
I was hoping for Alan Wade, but I didn't see council. I'm gonna just say in general, Doug,
Yes. Yes, I mean, essentially, the resolution is calling for the 100%. So what you're essentially saying is we are fine with the financial terms of up to a 100% backstop. But you have to authorize the mayor to enter into the debt service replenishment fund agreement. And in his role as the sole contracting authority, it's just like saying, hey, I want to appropriate money for some project, and the mayor and the council were opposed to it, and he said, I'm not going to do it. It's not like an ordinance that he can veto and you can override. He has to agree to enter into the agreement. So Alan may be able to give you some more nuance on that if there are others. I'm not a legal person. Jennifer, is there anything else you want to offer?
1 second, please. Councilwoman Johnson, Attorney Wade, he's virtual and he can respond to your question.
Okay, good.
Attorney Wade?
Can you hear me?
Yes, sir.
Okay. This resolution authorizes the mayor to enter into the necessary agreements. It doesn't direct him to do so. He's not ordered to do so. It is a resolution, and therefore it is not like an ordinance where he has to sign the ordinance before your second meeting. So this is merely enabling him to act. I think it presupposes, however, that if the rating agencies and the comptroller approves it, he will do so. I think the remedy would be for the developer then to try to compel his action rather than you to do so.
I heard most of that, to be honest.
If there are any particulars, you can re-ask him.
I think I heard he repeated basically what Doug said in the sense that it will require the signature of the mayor before anything can happen. So that's what I want, I don't want to spend all day, and then if he's telling us already that's not what he wants to do, I just don't know how much time should be spent listening. I mean, I'm interested in hearing the information, but I just don't know if we should, how much more we should consider if the mayor is clearly saying now he's not going to sign it, from what I'm hearing from his representatives. Not from him, but from the representative. It was just a point of clarification, and now I understand, regardless of what we do today, it's still left in the mayor's hand to proceed with. Thank you.
Thank you very kindly. Vice Chair Jones, you may be recognized.
Thank you, Madam Chair. Colleagues, I'm looking at the memo that was sent to us earlier this afternoon, and this says it says the resolution contemplates that the development will be funded in part with bonds to be issued by the CCRFC, Center City Revenue Finance Corporation, whatever. What I don't think that we've done, we are looking at this in isolation, and I don't think that we're taking into consideration what the other obligations are of that CCRFC. So even if this one goes well, there could be others that may not go so well that put pressure on, that would impair our ability to borrow something going forward. And so one of the things it talks about in this memo is the reduction of debt capacity. So until I would like for us to see a total picture of what after this, before this, as well as after this, what would be the obligations of the CCRFC is before we enter into this, because this is we may not have any ability to finance anything else with a 100% backstop of this, where if things would have remained at the 50%, we would have had, or we may maintain some type of ability to do so. So colleagues, I don't think that we can look at things in isolation and just say this particular project it may come to pass that we have to fund money. This is part of a bigger puzzle that I don't think that we have the answers to right now. So is there anybody that can talk about, I see Mr. Young here, can talk about what is the overall capacity and how that would be impacted if we commit 100% to backstopping this?
Thank you very kindly. Even though we know you, if you would please give your name and address for the records.
Yes, Paul Young, President of Downtown Memphis Commission. So to answer your question, I don't think that the CCRFC impacts the capacity of the city. So we are serving as the conduit issuer for the bonds. And so the question at hand is how much of the city's capacity is going to stand behind those bonds. Right now, you're at 50%, which is estimated to be $3.5 million. And the question before you is, do you go up to 100%? And either way, that applies to the city's debt capacity, not CCRFC as a conduit issuer.
Okay, so, but now this is not the only conduit issue that the city has looked to CCRFC to do so. Is that correct? So what I'm saying, colleagues, we have to take a look at those. It may not necessarily affect the CCRFC's capacity, but we have to look at other issues that the city has put its non-ad valorem, so any other sources of revenues behind before we commit to. I just think it would be prudent for us to take a look at that entire picture before we do that. We haven't had that discussion. We are just looking at this without knowing what the overall impact could be. I haven't heard that.
I do think that when the financial advisors are talking, they're talking about all of the debt that the city has committed to, all of the obligations, whether it's CCRFC as a conduit issuer or general obligation bonds and other ad valorem, non-ad valorem issuances that the city has stood behind. So that is taken into consideration when they give their, and I don't want to speak for you all as FAs, but I think that it is taken into consideration.
Okay, and so if that, and I know that it's in the public domain. I don't know if the Daily Memphian, the Commercial Appeal has talked about this, but according to this memo that was shared with us, PFM has identified the following risks and concerns for the city to consider. One being reduction of debt capacity, downward pressure on the city's credit rating, interest rate volatility risk, weak financial debt service coverage, uncertain terms of the development agreement, increasing cost of capital for the city, outside stakeholder relations, and then a market feasibility study. So we had this, and my first time seeing it is right when I sat down in this seat here. But there are some things in here that I don't think that we fully had an opportunity to digest, and I feel that we are being asked to make a decision without taking all of that into consideration. Thank you, Madam Chair.
Thank you very kindly. Councilwoman Robinson, you may be recognized at this time.
Thank you, Madam Chair. I basically have some of the same concerns as Councilman Jones, but evidently the staff did not think it was important to bring additional information or the whiteboard so that we can start doing some analysis. At this point, it's difficult to be able to, we represent the citizens of Memphis. And for my own consciousness and be able to share with the community, I want to be able to do what we can to improve whatever we need to improve downtown so that we have more visitors, we have more conventions. However, we don't know how it impacts everything else that we're doing until we got this information, and it's still not fully vetted. What I need to know, and I'm going to give all my questions at one time, and whoever can answer them, please try. How much time do we need to do the proper analysis? How does this process work for other organizations? This is the first time we've done it, so now 10 other businesses gonna come and ask us to do the same thing, and how do we say to them that, you know, this was a better deal than your deal, and they all may be on the same level? We've got to be able to have some real thought process around this and be able to substantiate why we want to do this moving forward and who we will do it with later, because we represent the citizens of Memphis. 100% to me is a bit overbearing for one of the largest cities in the United States that's poor. We say it may and may not happen, but that's a risk, and we don't have that information from Price Waterhouse yet. So I'm just asking us to take a deep breath, get the information, and share it with us in a manner that we can share it with the public with true numbers, with what the risks are, and when do we enter an agreement like this with someone else, or is this going to be the only time or the last time, and why is this the one? It's not clear to me yet, and I need some clarity. Thank you. So let me start my questions over so you know what they are. How much time do we need to get all the information? How does this process work with other organizations? And is 100% with no ownership by the city reasonable, or is there some number in between?
Thank you very kindly. I would like to recognize Chance Carlisle to come to the podium, and perhaps a lot of these questions you can answer. If you could please share your name and address for the records. And I see Mr. Burrows, if you could do the same.
All right. We're going to try that. Good afternoon. Chance Carlisle, 1 Dr. Martin Luther King Avenue, Suite 130.
Tyrone Burrows. I am here representing the Moore Fund, 2784 Calkins Creek Cove, Germantown, Tennessee.
Thank y'all, and I really appreciate y'all coming in on a Thursday afternoon and the last 2 days of dialogue with the administration. Clearly, this isn't a situation that we all found ourselves in, but it's one that we're here. So today, I hope we find some clarity and we answer all of your questions to the best of our ability. One of the main themes coming out of Tuesday was risk and reward, hope and opportunity. It reminds me of the first event we hosted at the rooftop of the Hyatt Centric Beck and Call. It was right in the middle of the pandemic, and we had just all sort of started to filter out, and we had 400 members of the Downtown Neighborhood Association hosting their event there. And we thought there was going to be about 30 or 40 people that showed up. And in that wonderful crowd and celebration, there was a question asked to the guest speaker, who happened to be Jason Wexler, the Grizzlies president. And that question they asked was, "Hey, Jason, what do we have to do to host an NBA All-Star game?" And he smiled and said, "Build more hotels like this one." And so when I weigh the civic cost of what we're doing, and I want to be very clear about where we are as a development team, the question got back to us when the Center City Revenue Finance Corporation's former president, Jennifer Oswalt, approached us during the construction of the Hyatt Centric in the middle of a pandemic if we would take on the challenge and tackle the ever-looming problem of what does the city of Memphis do after it decided to buy out Shelby County's portion of the convention center and renovate the Cook Convention Center, now the Renaissance. And I told her, "You're crazy. Who in the world would want to tackle this?" But we reflected upon it. We were convinced by her and her staff that it was an appropriate risk for us to take. And so we went to work, like we've done with the rest of One Beal. And we kept going. We never said no, but we understood the risk that we were taking. It's not easy, but it's also very clear to anyone who looks at how convention center hotels are financed that it is a first and foremost either public only or public-private model. Since 1959, HVS Hotel Advisors, there's 42 cities, 44 convention center hotel with campuses of over 600 rooms that have been built. Of those, 12 have been entirely publicly owned and financed, the rest public-private. The amount of incentive per total cost during that period of time averages about 33%. The Lowe's, which this body approved in its initial package, roughly had a cost of work that was projected at 42%. When we first came before this body, we had a cost that was closer to the 35% range. The total incentive package that nets, that the Center City Revenue Finance Corporation takes the local surtax, or the local 2.25%, the 5%, and then literally transfers those to us, and us being trustees on behalf of the Center City Revenue Finance Corporation. That package has declined from an estimated $84 million originally. Then we came back in March, and that package was worth $74.8 million. We said, okay, we increased our private capital to cover the shortfalls. Today, we stand before you with a need of that total incentive package to be about $66.5 million. Between March and today, my firm and partners, and in a minute, Tyrone's going to tell you who those partners are, because that too was another ask. Please bring in minority participation. Mr. Carlisle, 2.5 at first, then 5. Today, that minority participation is at 21%, with 14% from this community, local Black Memphians of every neighborhood. And so with that, I want Tyrone here to tell you a minute about that, and then I'll get into the details of how we got from 84 to 74 to 66.5, and what is being told to us by the Center City Revenue Finance Corporation's advisors.
Thank you so much.
May I ask a question, Madam Chair, before he changes?
Certainly, Councilwoman.
The question was, how much time do we need to work this out? Staff, together?
So I think there's, Councilwoman Robinson, I think there's two factors there. One that we don't control, and another one that we don't control.
Okay.
So all of our information is coming from, when it relates to what are the bonds worth, from Wells Fargo Securities and their principal, Jim Perry, who's here in the audience. Jim, you want to? That man is telling me every day what's happening in the bond market. He is an advisor and of the Center City Revenue Finance Corporation, and he is structuring these bonds in a way to get us to the proceeds of $66.5 million. Every time he does another run or another model, the city, by the way, same rating agencies, Moody's, they rate the bonds that are going to be issued, and then the city, through PFM, takes that, and they have to go back to Moody's, I believe now is, and I'll let the city speak to what they need to do, to see how that impacts the total city's debt. For us, on timing of the project, where we are, is we have signed a construction contract worth $163 million with 42 total work, 141 of, well, anyway, I'll get into the numbers. With $42 million of MWB subcontracts. They are supposed to get to our site to start work on Monday. We will push them off because in Tennessee, you cannot start construction until you close your construction financing. We were supposed to close our construction financing on Tuesday. Then we pushed to Wednesday. Then we pushed to Friday morning. If we get approvals today, we'll have additional dialogue with the administration about how long they need so that the mayor feels comfortable to sign the debt replenishment agreement. But that's the question of how long does it take the city to get the information comfortable to make the mayor comfortable. I know that in Mayor Strickland's email to the body, there was a note about some unresolved, unaddressed questions. We received a list at like 11 o'clock today. I think we responded affirmatively to every question that was asked of us. But, you know, we are going back and forth, and it is a fire hose. What I can say is a lot of late nights, a lot of discussion with the administration. Everyone's trying to figure out how to craft this deal. Authorizing this resolution today allows us to continue to move forward without killing the project and buys us additional time to craft a deal with the administration that would work. How we got here on the bond situation and what the bonds are worth and why we need 100% on the taxable, I would defer that question to Wells Fargo and Jim Perry, as he's the expert informing pretty much everyone in this body.
Allow him to answer that question. Then I need you to come back and tell me how hotels are financed normally, and what are those percentages?
Sure. And
okay, I'm sorry.
Mr. Perry, if I would volunteer, is probably far more qualified to answer that question than me because it's what he does for a living.
Okay.
You could please come forward.
And
Hello,
I hope
sir.
somebody is documenting this.
Name and address for the records, please.
Jim Perry with Wells Fargo Securities. I live in Jackson, Mississippi.
Thank you very kindly. Councilwoman Robinson, I yield back to you.
Okay. How are hotels financed? What is a normal formula? Who does what in working with your company? Because there are other companies we could work with.
There's I think that Mr. Carlisle referenced a number of convention center type hotels that have gotten done in recent years. And I would yield also to Lisa if she wants to correct me if I do say something wrong here. But I can't speak to every single one that's been done around the country. In recent years, you've seen Ones that we've worked with would include some of the hotels in Houston related to the Houston-Harris County Sports Authority. Sometimes, or Abilene, Texas got done last year. Baytown, Texas got done in recent years. There's also been the Atlanta Convention Center Hotel. One common thread with those is that there is oftentimes a long-term management contract with a hotel operator, in this case like Hyatt. Sometimes it's done where the city or county or regional authority actually owns the hotel and is then leasing it back to a Hyatt or Hilton or whomever. Sometimes you have senior debt that goes along with the equity that is secured by hotel revenues. And then you'll have a subordinated debt, meaning it gets paid second, that oftentimes will be a guarantee that's maybe backed by a widespread city sales tax or a citywide hotel occupancy tax. So there's not a one-size-fits-all structure with that, but the economics of the large meeting space, large 350-room type plus hotel, it's very, very common that there's some sort of government support, either in the form of a tax that's guaranteeing the debt or some portion thereof. In this case, what makes it a little bit trickier is that the taxes that the city of Memphis has provided to support this project are not widespread. It's not like in the case of Houston-Harris County, it's a tax that's over a very, very large jurisdiction, that's over many different hotels, and you're really taking more of a risk for the bondholders of are people coming to this general area. In this case, the 2.25% and the 5% tax are on the one bill district. The positive for that is that you have the Centric and the Caption are built, so you don't have the construction risk, and the Centric has been operating for a little bit. But you don't have a wide, it's not like it's on citywide of Memphis. Does that answer the question, Ms. Robinson?
Yes, it does.
I can't recall if there was another question I was supposed to answer, ma'am.
Is that it, Councilwoman?
So in the process that we're currently in, the city needs to come forward. Shirley, can you come and tell us what you need and how much time you need?
Good afternoon, Council Member Shirley Ford, Chief Financial Officer of the City of Memphis, 5343 Mason Road. Thank you for the opportunity to be here with you this afternoon. I realize this is a very important discussion. I will share with Council, and many of you already know, when the city issues bonds, it takes us about 4 months from the time that you approve it till we close the deal. This is not an easy, complicated process. We have brought so many resolutions in front of you asking permission and telling you where we are and reporting back to you. We are not issuing these bonds. CCRFC is issuing these bonds. They can issue bonds without us. They don't need us to issue bonds. What's being asked here today is for the city to back these bonds to get a better rate for the developer. Okay, so that's basically where we are. If we want to move forward at a 100% backstop on this debt, it would probably take 4 to 6 weeks to get all the information from the developer's team, present it to Moody's and S&P, and get a final back from them on the impact that it would have on our ratings. We have our financial advisors here. We have Pam Clary from ComCap, who many of you are very, very familiar with, and they can tell you where we are. And they just repeated part of it a few minutes ago about where we are in terms of our bond rating and what the impact could potentially have to us. If you want a specific number on that, we would have to give them time to calculate that number for you, and I would estimate that to be somewhere between 4 and 6 weeks, ma'am.
Okay, thank you.
Yes, ma'am, thank you.
Mr. Burrows,
Thank you so much. You know, the first time that I appeared before you all was when you all were so gracious to name a street in my honor. And that was very historical for me. Mm-hmm. And here I am again today standing before you which I also think is a historical moment because we were able to put a fund together that a fund together that are made up of Black and brown people, not only to invest in this project, but not only to invest in the city, but to invest in major projects. And this is one of the projects that we were given the opportunity to be a part of. And for us and for the people that are in our group, this is really significant to us. I don't think, and I've lived here in Memphis for the last 35 years. I'm not from Memphis. I've lived here for the last 35 years. And to the best of my knowledge, we have never had an opportunity to participate in any major project at this level. And so not only that is important to me because I put a lot of work into bringing this to a reality, but not only did I put a lot of work into it, there are a lot of other people who are involved in this opportunity. And obviously, I know that everybody have their due diligence to do, and we expect you to do that. But I think that we have an opportunity to show not only the citizens of Memphis, but people across the country that we can be a city that's all-inclusive and that we can have people participate in major deals that give us all an opportunity to be a part of what I call this great American dream. So I'm here representing the More Fund. I'm one of the general partner. The other general partner is out here in the audience, Mr. Floyd Tyler, and another partner, Dana Pointer. We are all involved in this fund, and obviously we would ask that you seriously consider advancing this to the mayor's desk, even though he is not ready to sign. Thank you so much.
And if I may, Councilman Robinson, you asked us for the whiteboard. I'm a little millennial-esque, so we did put it in a PowerPoint, and I would like just to highlight, I guess for the record, some of the benefits, protections.
Can you show us so we can see?
You have it. Oh, I'm sorry. I thought it was passed to everyone.
We have it.
Okay, sorry. So, for example, Mr. Perry said it's only the one Beale district. So let's talk about the one Beale district. Over the next 30 years, third party, CBRE Hotels Advisory Service, and others have looked at the total projections of sales revenue. It's $3.5 billion. Pilot payments back to the Center City Revenue Finance Corporation, $28 million over 30 years. Police and fire, for those interested in increasing the police and fire budget, $17.5 million over 30 years. The city's portion of the hotel motel sales tax is projected at $28 million to go back to help repay some of that convention center debt. There's a room block agreement, $42 million in MWBE contracts, and a projected $1.8 billion in wages, according to the Younger report. As the chief also mentioned, we'll be a principal tenant in the new mobility center that is literally half a block away from us. And we'll also be able to recapture a portion of the state's share of the TDZ revenues, I believe through 2031. Protections, like I said, CBRE prepared the projections of the hotel revenues. Reynolds Greaseback prepared the projections of the tax revenues. And this is just all my way of saying, you don't have to take my word for it. There's a lot of people that have a lot of credibility on the line that these are reasonable. Hyatt Corporation is the manager of the properties. You don't have to worry about me making a drink or checking anyone in for a hotel. As Mr. Perry mentioned, we'll have 25-year operating agreements that have a requirement to protect both Hyatt's brand and the city's investment for FF&E, which just means that reserves so that we keep the hotel looking great. There are a new protection that the city negotiated over the last 48 hours that I also thought was a terrific suggestion that came from Chief McGowan and his team, and that is on the 2.25% local sales tax rebate. None of those proceeds that would be called excess revenues would ever come back to us until the city's portion of that series of tax-exempt debt was fully repaid. It's held in escrow. In the protections for the city, also on the debt, there's a requirement, as we mentioned, to refinance the bonds by 2032, or in 2032. There is our company, my company's construction completion guarantee to make sure that the hotel happens. And like I said, we're already under a guaranteed maximum price for the construction with a firm, Reeves Young, who's one of the best construction firms in the entire Southeastern, maybe the United States, who built the Georgia Aquarium and a number of high-end luxury hotels. So why are we here, and what's really the crux of what we have to get accomplished? And I just kind of want to restate this issue because we keep talking about the bonds and the maximum value of the bonds, and I want to make sure the public in particular understands what we're asking and what the bonds are trying to do so that there's an understanding. The 5% surcharge and the 2.25% local tax, I'll call it redirecting, allows the Center City Revenue Finance Corporation to go and issue bonds. Those bonds are rated by the same S&P and Moody's. And in the recent turmoil of the bond market, we found out that the 50-50 option is not a viable path forward because one series of the bonds, the 5% surcharge, isn't really a well-functioning market today. And so the value that we would receive from issuing those bonds has dropped significantly. And I would like Jim Perry to explain that to the council because that is why we are asking for the 100%. It's not necessarily because we want the city to be on the hook for more money. It's because that the same rating agencies that are going to rate your debt has rated the Center City Revenue Finance Corporation's issuance of those bonds as investment grade. And because with 100% backstop on the taxable series being investment grade, we'll receive the necessary proceeds to move the project forward. Jim, you want to explain a little bit about the current state of the market and why that matters and why 100% versus any other number matters?
Ma'am, is it okay if I speak again?
It's great. I have 3 additional council members that are in the queue, and perhaps one of the questions that will be asked would be a part of what you're about to answer. So if we could go, Councilman Warren, you have spoken. If you don't mind, I'd like to go to Councilman Morgan, who has not spoken. Councilman Morgan, you may be recognized at this time.
Thank you, Madam Chair, but my question may be addressed by his comments, so I would defer and then speak later.
Okay, you go ahead. You can have I'll bring you back. Councilman Morgan, if you could have your question addressed at this time by the designee.
No, it was exactly that. Just to continue with the explanation that Mr. Carlisle touched upon in terms of the bond market and the difference of, I guess, this. I'm forgetting my vocab term for the evening. Ms. Perry, go ahead.
So 2022 has been a very interesting year in the capital markets, and the municipal bond market has been no exception. We've enjoyed up until 2022 2021 was a very stable. There wasn't a whole lot of movement in interest rates either way. If you look at where the tax-exempt borrowing costs for the city of Memphis, if you went out and did a AA GO borrowing, if you'd done it in February of 2021, it wouldn't have been a whole lot different than November of 2021. So 2022 comes along and it started getting worse. general economic conditions, mostly concerned about inflation, the things that we see if you turn on CNN or what have you, what's happening with gas prices and other prices, supply chain, et cetera. That has certainly impacted. So you see the stock market coming down. We've seen interest rates, whether it's U.S. Treasury rates or in the tax-exempt bond market, where a city of Memphis borrows money or the state of Tennessee borrows money. In April, when we came to you, we'd seen that and said, this is of concern. We're worried that we're not going to be able to get as much proceeds. And then what happened after April is, if you recall, we started seeing like 8, 9, approaching 10% inflation numbers started happening after that. There was about a week in May where it got a little bit better, and perversely, it's because Mr. Putin in Russia started rattling his swords a little bit more in the Ukraine. People started getting afraid, so they started investing in U.S. Treasuries. When more money goes in the U.S. Treasury market, that means prices go up, rates go down. Well, then we got into June, and we got a 10%, I can't remember the exact number, 9% inflation number. At that point, we actually had one day around that time where more money was pulled out of the municipal bond market on that single day than any other day in the last 40 years, except for 2 others. It's just been investors are generally right now uncertain about where to put money. They're worried about they don't like putting in the stock market. They don't like putting in the bond market because they believe that rates are going to keep on going up. And those actions, back in April, the markets did not expect the Federal Reserve in April that they would be raising the federal funds target rate in June by 75 basis points like they did. Then you see what happened yesterday with the inflation numbers. And now there's a widespread belief that not only will the Fed increase rates by 75 basis points again this month, but they may even raise it by 100. In the last couple of weeks, actually, we've had a little bit of improvements in the market. Yet today was a rocky one. The consistent thing is it's been very, very, very volatile. And in the municipal bond market, most people who buy bonds in the municipal bond market are because they want to buy bonds that have tax-exempt income. When they get their interest payment, they don't have to pay income taxes on that interest payment. In the state of Tennessee, y'all might not be aware of income taxes, but I guess you do have federal taxes. When you sell taxable bonds, there is a market for taxable municipal bonds. There's a lot more of those being issued in recent years than in years past, but there's not a huge market for non-investment grade or high yield taxable municipal bonds. And so when our market gets volatile, one of the segments of our market that goes away first is the high yield, meaning non-investment grade taxable municipal bond market. For this transaction, because of federal tax law, not because of anything that we're structuring, roughly 2/3, 70% of this deal is taxable municipal bonds. We were trying to get to a investment grade rating on that series of bonds in order to increase the certainty that A, it gets done, and B, that within a better credit quality, you can get a lower interest rate. A lower interest rate, you get more project funds. So the one challenge that we have here, again, just because of the vagaries of law and also because of the way that the rating agencies have had to operate since the 2008 financial crisis, is they have to have everything that fits within a box and a certain buckets, certain methodologies. And they have, if it's a tax-secured bond, they have a special tax methodology. If it's a GO bond, it's a GO. If it's a project finance bond, they have a project finance methodology. Ms. Robinson asked earlier about some of the recent hotel convention center projects. I mentioned a couple of them, Baytown, Texas, and Abilene, Texas, both did financings last year. They actually got BBB- ratings for their hotel revenue debt. That was able to be under one type of methodology, one type of boxes that the rating agencies can do. But because this is a tax-secured bond, we have to use, and this is something we've been talking to Moody's and S&P about for several months, and they've changed their opinion on this from their initial reviews to where they got to at the end, that it would have to be under a different methodology. And I'm sorry for the very technical municipal bond stuff, but the long and short of it is that absent a 100% DSRF replenishment agreement, we do not believe or have any sort of confidence, have frankly been told that these bonds, mostly because of the type of methodology that they would have to use because of their regulators, that they would not be rated investment grade. If you sold in today's market, if we were sitting here in November of 2021, we'd be having a different conversation. Or any time in 2021, we'd be having a different conversation. As volatile as this market is, I cannot say with confidence, and I would challenge any of my competitors to say with confidence, what exactly the proceeds would be from the taxable sale. The tax-exempt portion of this does not give nearly the same level of concern because there's a much larger group of investors that would be interested in that. So what we're trying to do is to give certainty that the deal can get closed, given that we know that the developer is trying to deal with equity commitments and other construction debt commitments, as well as trying to get a low enough cost of capital so that we can get to a certain amount of project funds, recognizing that since the beginning of the year, broad indices, the U.S. Treasury rates, et cetera, are a lot higher, but also the extra amount of credit spread that investors are demanding is a lot higher. Those two things in combination have increased the cost of capital substantially. One point of clarification that I do want to make just for the record, I'm actually nobody's advisor on this transaction. Under federal law, I'm an underwriter. I have obligations on all sides. PFM is the advisor to the city. I'm here telling you what the market is and what it is, but I'm not a municipal advisor under federal law. So I just wanted to clarify that for the record.
Thank you very kindly. Councilman Canale, you may be recognized. Councilman Warren, you're next in the queue.
Thank you. One of the things I heard people say earlier that some of these deals were done where they were part equity of the local municipality and part private. They're like a mixture. And this is not a mixture, is it?
Well,
Is this a completely private equity venture?
It is, except that what effectively these bonds, the 2.25% and the 5%, effectively what it does is it's facilitating the borrowing of money against those anticipated tax revenues, and those tax revenues are only generated by this project. You'll hear a lot of parts of the country about tax increment financing, TIFs. That's effectively kind of what this is, except that we're already have 2 of the properties constructed. The rest of this project is equity of a substantial amount and then you have other debt from private lenders. One thing that is a little bit different here is that unlike the Baytown or Abilene and some of the other projects, because it's a tax revenue thing, every dollar of tax revenue generated from this project is going to reduce the liability of the city if you do that.
But as you're looking at this, if, and what I'm hearing from my colleagues is, they're concerned about the city taking on this, risk is what they're looking at without any benefit of equity involved in it. And I'm wondering in these other projects if, as the different entities are involved, you have the municipality and the investors, how do they determine what a fair share of equity it would be for the municipality if they're going to take on a risk? Do they deserve some equity for the risk that they're taking? And does that make it more palatable when you're dealing with a bond rating agency and they're looking at it? Would a bond rating agency give you a higher rating if you had equity involved in it or not?
I think the way that we've looked at this project is that if you stack up the amount of equity, in this case private sector equity, and the level of construction risk compared to other projects that have happened recently, the location of the project, which in this case was a great location, the experience of the operator, et cetera, I think it stacks up very, very, very well. If not better than most of the deals that got done in the last, call it 18 months or so. It's just that there is in terms of the credit rating process, we're having to use a methodology by which they're scored that is different than the way
I think you may be using credit rating differently, or at least on the project. And what I'm looking at, or my question, and maybe you can't answer this, and maybe it should be one of the people who do the bond for the city, is would that improve the city's bond or credit rating if we had a bit of equity in this project? And would that give us some leeway to move forward with the comptroller and other people as they look at this deal?
I'll let the city's financial advisors speak to that specifically to the city. I would say that I do a lot of work with other cities and counties around the country, not just projects like this. And I think that generally the idea of governments taking equity in ventures is viewed with some suspicion. Might be the right way to think about that.
I'm just looking because we took a whole lot of equity in the Renaissance Center. I think we own it, right?
I'm not familiar with the details.
It's our yeah.
That's different, though.
Yeah, it's our convention center. So if this is going to be a hotel somehow supporting that center, I guess I could see how that might make some sense. But thank you.
I can't speak to the.
Is there anybody who could speak from the city perspective about whether this is a crazy idea or it makes any sense?
Hi, Lisa Lawrence again with PFM. Your question is not crazy. I think there's some logic to it. Let me just back up a little bit to maybe address the answer. Councilwoman Robinson, you asked about how most hotels are financed, and I think, you know, most hotels are equity deals without any public participation, but occasionally a developer will come and in an event where you have a convention center or something of public good where there can be a public-private partnership, the municipality will get involved. I've recently been now 2 to 3 years trying to negotiate on behalf of the New Orleans Convention Center, a convention center hotel down there, and it has come to the table 3 different times and decided that it wasn't the right deal. And just like the FedEx Forum was a case where the public and the private entities got together, and there was a 2-year window in which I was involved in negotiating the terms of that development deal. Not easy deals to be a part of. What's important is that there is a recognition of shared risk and reward. And if you think about, as he just described, the credit rating without the city's credit, it's a non-investment grade credit. It is what many people call a junk bond status. And what they're asking you to do is to put the city's name in front of that junk bond status to elevate it to the city's rating, which actually would probably be a notch below the city rating because it has this nature of an equity component to it. So it's important to realize as you become a partner with this development, what the risks are for the city. We did identify several of those in the last 48 hours and came to the table with those points of negotiation that he brought up as being good ideas. I think there's probably more of them for the city to protect their credit and to protect the risk that they share. To your point, if you're going to take a risk, like in the marketplace, when you're taking a risk, you get a higher return in the marketplace. If you're buying a junk bond, you're getting a higher rate. And that's really why we can't afford this deal as it is. So as you elevate the credit and you share in that, you pass on, you should get some reward for it. And so the deals that we've worked on for hotel developers, we do see some, not equity as you think about equity in the deal, but you see a return of investment at some level in response, whether it's a ground lease or something of that nature. In this case, it's a little bit different because you don't own the hotel and you don't own the ground. But there are ways, I think, that, you know, because you are taking on risk, that there should be a reward to you, if that answers your question.
Thank you, Madam Chair. I guess as we're looking at this, I think what I'm hearing is there's no way that we can get all these questions answered this afternoon, but it seems like it's highly important that we move forward with this process. And the fact that nothing can happen until the mayor signs the deal means that it may behoove us, in my mind, to move forward and recommend this today and have them bring back a final deal that we can, that the mayor can sign off on and we can approve. So I hope that that's what we end up doing. I still want to hear the rest of the presentation of my colleagues. Thank you very much.
Thank you very kindly, Councilman Warren. Councilwoman Johnson, you may be recognized.
That as a result of the presentation, it was said that these bonds could be financed in 10 years, maybe. Why can't we put a definitely on that? What is the hesitation on that?
I might probably be the one that best to answer that. If you say that you're definitely going to do something, you get 10 years from now, and investors know that the city or CCRFC has to do something, then they have you in a very attractive negotiating position at that point, that attractive to them, not to you. So it's just something to keep in mind. I think that I understand the appeal of that, but 10 years from now, it might make it a little bit not as appealing.
Okay, so in other words, your investors would hesitate because they know in 10 years their returns may be less than they had anticipated.
Well, the way a refinancing would work is that most of the time you would get new money from new investors who are investing in new credit terms. You take that money, you pay off the old debt. When you go out to try to sell new bonds, and those people who are looking at buying those new bonds know that you have to sell. So if you have a car and I know you have to sell it to me, then I'm going to keep on lowering the price I'm willing to pay. And if in a bond situation, that means the interest rate goes up. So you just want to be careful about, and I'm not your advisor and I yield to others, but you got to be careful about giving away your negotiating position, even if it's only 10 years.
Okay, I understand that. Okay, if the hotel was sold, would the city have to sign off on it?
Hi, Chance Carl. My understanding is that the Center City Revenue Finance Corporation would have to approve and consent to any refinancing and any sale, which is typical in pilot transactions. And during any sale process, there's been discussion with Mr. Young about an enhanced fee above the usual and customary fee that you would pay in a sale that would help the Center City Revenue Finance Corporation recoup.
Okay, that's my next question. How long do you think it would take? What type of funds are we going to be accumulating over a period of time with that additional 2 and I think it was 1/4 on taxes, 2 1/4 local tax, sale tax that was recommended?
So I think two questions there. How long would it take to reasonably get the hotel to the point where we would sell or refinance? It's one. And then let's look at the 10-year, what I call refinancing opportunity. So today, we start construction on the Grand Hyatt. It'll take us 24 to 28 months to complete it. Typically, it takes a hotel somewhere between 6 months to get to stabilized operations, which is what we saw at the Grand. And then you need at least 12 to 18 months, particularly for a property as unique as the Grand, to give whoever would buy or refinance the hotel enough track record so that we can do that. To be very candid, my number one goal, outside of getting the thing built and off of my construction completion guarantee, is to get the hotel refinanced and off of my payment guarantee, where I'm guaranteeing our senior lenders a payment, just like the city is guaranteeing the Center City Revenue Finance Corporation's bondholders a payment. I too am sitting in your shoes should it fall short. The difference is you guys get it's every dollar of revenue. I have to worry about every dollar of profit. So I'm highly motivated for this hotel to be successful, and I'm highly motivated to refinance the hotel. but it will take at least 4 years to 3.5, really to 4 years to do it, which is why our senior loan is has a 4-year term, so that hopefully when our debt comes due, we have the performance to refinance the hotel.
Okay, thank you. My next question, I think, goes to administration.
Yes, ma'am.
Doug, you're pretty good at most questions. Okay. When this project started, we were told the importance of it in order to make sure the convention center survives. If it does not go through, where is the city of Memphis in regards to possible commitments we've already made, future advancements? You know, it's just, I find this to be an interesting situation. Mr. Carlisle said that we approached him about a hotel because of the need. I think we lost some hotels who we thought were coming. They did not come to fruition. And he, using his knowledge and experience and gathering all his resources together, came up with the best possible option to try to save the convention center and the economics for downtown Memphis. So if this project does not go through, what will happen, or what would be our next step to ensure the convention center survives?
It's an excellent question, Councilwoman, and I'm happy to provide my thoughts on the answer there. So our convention center does not rise or fall on any one particular hotel.
Okay.
When we talked about the convention center renovation at the time, we said there are several issues with our convention center. Number one, it was functionally obsolete. Number two, we did not have sufficient hotel rooms in downtown. We were short by about 2,000 hotel rooms. This is, think back to 2016 where we were. And as importantly, we needed some large hotels so we could book some room blocks. Because folks didn't, if you have 2,000 hotel rooms, new ones, and they're all 100-room hotels, an organizer for a convention does not want to have his conventioneers in 10 different hotels. So yes, the desire is to have room blocks in several large hotels. So that's why we have pursued with the owners of the Sheraton a renovation and expansion, and that is still an ongoing negotiation. That's why we did an RFP for a hotel with the Lowe's Hotel that did not ultimately come to fruition. And I was not privy to the exact conversation that Mr. Carlisle had about whether the previous president of the Downtown Memphis Commission was actually, what exactly she said. But I do know that when we talked about this hotel, we said this can be an important component because it is a full-service, upscale hotel of 350 rooms. So that's a key piece. It's not the only piece of our convention center. I do not want to diminish its importance, but I also don't want to overblow. If this doesn't happen and the convention center, suddenly dries up. Just realize there are no room blocks booked today at the Hyatt Grand because it's not built yet and not underway. Yet our convention center is rebounding to pre-2019, which is our high water mark. They are already exceeding their bookings that they had at the very highest level, largely because it is no longer functionally obsolete. One of the things that you all funded was a new loading dock there. If you recall, we had one elevator. We could take one truck at a time up to the convention center floor. We said we shouldn't invest any money in the convention center unless we fix the loading dock. Now, you can have fully 6 semi-trucks at the same time offloading and onloading. So the functional obsolescence has been overcome. The quality is overcome. That will take us to another level. Further, we no longer have a 2,000 hotel delta in downtown based on our demand because the market has responded. And Mr. Carlisle's development, we're incredibly excited about the Hyatt Centric. It's a wonderful hotel. The Hyatt Caption adds to that. They are not necessarily upper upscale full service. In the case of the Caption, it's a limited service, but very nice hotel. The Hyatt Centric is an upper upscale hotel, and those will serve part of that need. But what I don't want to either say, if the Hyatt Grand is not completed, that our convention center will fail, because it will not. Will it realize its fullest potential? It may not. What will enable it to reach its fullest potential is if the Sheraton Hotel is brought up to its full potential and expanded. If the full One Beale development, all 700 rooms there, is brought to fruition. The Peabody is making a significant investment. The Hyatt, the other hotels that we have downtown are continuing to come online. The Arrive, I think, is soon to come online. There's another one proposed for the Pinch District. Some upgrades to the, I'm drawing a blank on the name of the hotel, and I apologize, but some other hotels are coming on that will help to meet that demand. So that's a long way of saying no one hotel will make or break the convention center. At all accrues benefit. Is it an important part? Sure it is.
Do we by any chance know how many conventions we may be losing on a daily basis because we just don't have the hotel rooms currently that people
I don't have
inquire?
The answer at my fingertip. I could probably get that for you.
I think that would be important for the people to know if we truly are losing. And I talk to people, that's what they keep on saying. We need more rooms.
There's no question we do need more hotel rooms. And remember, we have added a significant number of hotel rooms here to help us with that. So this is another 350 out of that 2,000 gap.
Okay.
Hopefully I've answered your question adequately.
You have, but it's somewhat disturbing when one day I hear we need it so badly, and then the next day come back and maybe we can do okay with it, do okay with it later.
And I'm not trying to minimize the investment we made before, but we're talking about, if it doesn't happen, does that kill the convention center? We talked about not realizing the full potential of a fully renovated convention center. And that's what we're really talking about now. I'm not talking about whether the convention center rises or falls. Just do we reach our full potential? And I'd be a fool to stand here and say that we wouldn't welcome this to help us reach our full potential. And in fact, that's why we did what we did.
Okay.
30-year pilot, parking, rebate, all that stuff, because it's that important.
I think that we have so many people involved in this particular project that I think every effort possible would be put forward to make sure it is a success. The equity group, minority equity group, will work extremely hard to encourage conventions to come. We realize that if we accept this responsibility, it's going to be everybody's responsibility to make sure it becomes one of the best convention sites in the country. So I see the pros and cons, but at this point, I still believe that it's necessary for us to try to move forward on this project. Hopefully, the mayor can find and get the information he desires in order to come to an understanding and agree to it. But I can understand his position as mayor of this city. That responsibility lies with him, and he has to make that decision. Thank you, Chief. Thank you so much.
Thank you very kindly. Vice Chair Jones, you may be
Ms.
recognized.
McGowan, before you sit down, question that I have for you is, can you elaborate more on the proposal that was made but rejected?
I can. Okay. And again, I'll count on my colleagues, and these are all colleagues here, from the city side, from our financial advisor, Mr. Carlisle, and his team will have a perspective. What we understood, and again, this is the understanding of the proposal that we originally had with the 50% backstop, and then, as was explained, the recent changes in the market, that What we understood is that the 50% backstop would not yield sufficient bond proceeds to fully fund the market, or to fully fund the project. What we understand is that they need $66.5 million of bond proceeds to go towards the project. There will be about $81 million of total proceeds issued. Some of that money will be put into a debt service reserve fund of about $6.9 million. Then there will be about $9 million of capitalized interest, which pays the interest on the bonds during the construction. So I'm just using round numbers. There's about $17 million there out of the overall proceeds. And then there's a coverage ratio. When you do all that math, what's left to go to the project is $66.5 million. Because of the market, as we understood with the 50% backstop, you wouldn't yield that many proceeds with that kind of a backstop. And there was a gap, as described to us, approximately about a $10 million gap at that time. And I just want to stop and say, caveat, there has been a lot of movement every single day. But at that time, and the problem we were attempting to solve was to say, well, if there is a $10 million gap, and we think it's too risky to do 100% backstop, is there a different option that does not put the city's credit rating at risk, does not put pressure on our future ability to borrow, but can potentially make use of cash that we might have available because revenues were in excess of expenses, or because we found something that we didn't have to fund and were able to put together something. And so we felt like an opportunity, and I credit, this is not my idea, so I want to credit our financial team for saying, well, if you have to use $6.9 million of the bond proceeds to fund that debt service reserve fund, what if the city just provided, in this case, we offered $5 million of essentially a cash loan that would be paid back to fund that debt service reserve fund, freeing up bond proceeds for the project, meaning you get that much closer to the 66.5. I think Mr. Carlisle and his team will tell you that that's separate and apart from whether a 50% backstop can actually be sold in the market, but that's the problem that we were trying to solve, and that's what we believe would help us get to where we are. We would then have a 30-year pilot, the local option sales tax rebate, the 50% backstop, the parking, the TDZ piece that came into it, and then this $5 million that would have pre-funded the debt service reserve fund to free up bond proceeds for the project. That, as Mr. Carlisle described, then would be paid back with those excess sales taxes in the future over the next 5 or 10 years. So it would be a short-term bridge to allow the project to proceed without putting the city's credit further at risk. That's the simplest terms I could put it. Is that clear what I'm suggesting?
It does. And so I guess my question now, Mr. Carlisle, why can you explain why those particular terms were not acceptable to you?
Yes, sir, Councilman Jones. We will accept, I want to be emphatic about this. Any scenario presented by the Center City Revenue Finance Corporation that gets us to $66.5 million. That is the bottom line number. And the certainty, and I want to be clear about this too, doesn't have to be 100% to get to 66.5. I am willing to take some market risk. I mean, I'm about to lose millions, so of course I'm willing to take a little bit more risk, as is the city. If you're in the neighborhood of 66.5, and what we were told by Mr. Perry was that the 50% taxable series had too much risk and that he could not guarantee execution, a certainty of execution of being able to sell those bonds in this market. And so he was afraid that the gap would widen significantly over the next 3 to 4 weeks. And so that's what gives me the heartburn, is what happens if it's significantly short. I will take anything that gets us to a reasonable Delaware Chancery Court business practice of saying that this deal should happen because I have a fiduciary obligation to my partners and to my banks to make sure that we can complete the hotel. I am the one signing the construction completion guarantee. And so the mechanisms of orders of how this has worked, I have closed my partnership agreement with Mr. Burrows and his friends. Next step, we will close our senior construction loan, and the bank also has a fiduciary obligation to make sure that I can perform and deliver the hotel. And so they have to be satisfied that at least we're in the neighborhood of getting close to 66 and a half. And so, we have talked about, I don't know, over the last 48 hours, about 50 structures. I have complete faith in the administration that they want to get this done. I also know that they have a number of priorities that are competing. We have not ever once asked for $1 more that I thought we needed to actually close. And so if you want to provide maximum flexibility, and I'll just go ahead and throw this out here, and you guys may just start throwing rotten fruit at me. We need the money over 2 years. You could amend this resolution and say up to 100%, which the mayor would have to sign off to on the debt service obligations, and up to an amount greater than $5 million, and let the administration haggle about it. I have been very leery, very candidly, about using money that came outside of our project. 100% of the public subsidy is being generated off of our investments. And I always like that. But where I am today, if there is the ability to reduce the contingent liability by increasing the cash contribution, I'm 100% open to it. What that amount needs to be, we've been told, is probably somewhere closer to the 10 to 15 million range, just depending on where the bond market is. It could be 3, it could be 8, it could be 12. Every day this thing moves like a cat, but that is the sure 100%. This gets this thing over the finish line, as I've been told by the advisors, is some combination of debt service replenishment guarantee and cash, and then we just have to see what that is. We've just been very reluctant, and Chief McGowan understands that I have not wanted to come before this body and make that type of request. But should you see so fit to do it, that would give the mayor and the administration the maximum amount of flexibility to craft what they think is the best interest of the city. And I don't want to speak and put words into Chief McGowan's or the administration's mouth, but I don't care how you get to 66 and a half. I just need it to get to 66 and a half.
Mr. Perry, I have a question. Could you give me an idea of what the spread is between investment grade taxable munis and then non-investment grade? And then can you translate that to a dollar amount as it relates to this issue?
It's a very reasonable question. Unfortunately, it's a very hard one to answer because for selling approximately 60 million of taxable bonds, it's like anything. If you're selling one of something, it's a different price if you're selling 60 million of it. The difference between selling an investment grade in this market, selling an investment grade taxable municipal bond of approaching 60 million and it being non-investment grade is more about certainty of execution. Might that be a 7% cost of capital? Might it be an 11% cost of capital? I mean, I really cannot, it's going to be a price discovery process. That is a little bit of the problem. I think Chief McGowan quoted something that I'd said the other day. I said it could be a $10 million gap to 66.5 million. I said it could be more. The honest answer is I don't know. It would be a price discovery process. I feel very confident that it's at least a $10 million gap, easily. But one of the reasons when Mr. Carlisle asked me with a 50-50 replenishment, 50% on tax exempt, 50% on taxable, and a $5 million contribution to reduce how much you have to get in project funds, if I believe that there's already a $10 million gap and it easily could be more, and somebody asks me, does that get you to 66.5 million? And somebody says, here's 5 million, but I know there's at least 10, I have to say no. I mean, that's a gap. And I don't have the confidence that the municipal bond market in the next 3 to 4 weeks is suddenly going to rally by several hundred basis points and lower that cost of capital.
And then talk a little bit about, you talked about, and correct me if I'm wrong, there's a separate, if you would, tranche related to the 2.5 local sales tax, and then the separate tranche for the 5%, but it's the 5% that deteriorated a bit and made it less favorable?
The 2.25. So the way that the bond lawyers, the tax lawyers have told us is that the series of bonds, there's 2 series. One is secured by the 5% tax. One is secured by the 2.25% tax.
Okay.
The series of bonds that is secured by the 2.25% tax can be sold on a tax-exempt basis. The income that the investors get from buying those bonds will be exempt from their income taxes. The 5% can only be sold on a taxable basis. That's something that is outside.
I get it.
We're told that.
Yeah,
right?
I get
And
it. Yep.
It's the 5% series which is approximately a little bit more than 2/3 of the overall financing. 5 divided by 7.25. That's the market that is particularly challenging. I mean, the entire municipal market is under stress. Just like you cannot get on CNBC and look at a market and not see it's under stress, whether it's commodities or Bitcoin or equities or bonds. But the part of the municipal bond market that would be most under stress would be a taxable high yield, meaning non-rated thing. As I said earlier, we believe that the credit characteristics of this bond are as good as, or if not better than, some of the bonds that received the lowest tranche, BBB minus ratings from a couple of the projects that were done with convention center type hotels last year. However, after much debate and machinations, Moody's and S&P said they would have to use a different set of criteria by which to judge our rating as opposed to the criteria they used for those projects.
And so, Mr. McGowan, that 5%, if I'm not mistaken, is that the TDZ portion? So are they essentially saying they don't think that the tourism numbers will be what they're projected to be, and therefore there's a greater amount of risk that's associated with that type of revenue stream to pay those bonds?
I believe, and Mr. Perry can explain, I think it has more to do with the non-taxable versus taxable than it does with the revenue stream. The 5% is a surcharge, and that is an allowable fee that's charged by the hotel operator on all of the proceeds. So in other words, there's a sales tax, the $2.75% that we have, the state sales tax of 7%, and on top of that, they put a 5% surcharge on everything that's sold. And that's the proceeds that are going for that non-taxable revenue.
Okay, so.
But I don't know if that has anything to do with it besides the fact that it's non-taxable.
Okay.
It's just a revenue stream.
It's just the taxable versus non-taxable aspect of it. Okay, gotcha. What has always been my issue with this is the scenario that I think about. It's always been a risk reward. We are asking to take on an unprecedented amount of risk. And what hasn't been reconciled for me, an unprecedented return potential for us. So here's how I looked at it. Say this is 30 years. And let's just say that in 5 years from now, we go through another pandemic-like economic environment. So we have to kick in $3.5 million for 3 years, $10.5 million. Things rebound. It's sold. What does the city benefit? Because we were on the hook for that risk. So all I want is if there's going to be a reward for everybody involved, I don't see the reward for the city. That's all I've been asking about this. We are being asked to do something that's unprecedented on the risk side. Where's the unprecedented return side? I haven't seen that. If somebody says to me, and one of the things you talked about, Mr. Carlisle, negotiating a fee, if it's said in the deal that there's a fee, whatever the fee is when something that the CCRFC has to sign off on, normally that's a nominal amount. If it's possible to tie that fee to a percentage of the proceeds, I'm signing right now. But for the city to be on the hook, we have an outlay, I'm just throwing up numbers out there, $10.5 million that we've had an outlay. Yeah, these flows, and you know, I never buy into the projections that everybody says about, because we talk about the pilots, we haven't seen the poverty level in this city decrease based upon how many pilots we project. So I don't buy those numbers. But if this and I'm not counting anybody's money, but the taxpayers. If this project, I'm rounding numbers up, if this project costs $200 million, we have to kick in $10 million, it's sold for $400, where does the city benefit? I haven't seen that. If a deal can be structured to where we benefit just like everybody else does, I'm okay with it. I haven't heard that. Thank you, Madam Chair.
Thank you very kindly. Councilman Moore.
One other thing, too. So and think about it, when we're talking about a refinancing in 10 years, what we got to think about whether rates are favorable to do so. So just like with our houses are concerned, if rates go up to 8, you're not going to refinance. So where would we be sitting if we're talking about a situation where the environment isn't conducive for a refinancing, whether, 2032 is going to get here regardless of, is going to get here regardless. And so how does that adversely affect us from the city standpoint if it's not able to be refinanced at favorable rates? So those are sort of the questions that I have about this.
Thank you very kindly. Does that conclude your?
Yes, it does.
Councilman Morgan, you may be recognized.
Thank you, Madam Chair. We've touched on a lot of points. I'm going to try to boil this down as best I can. And to start with the last question asked, or second to last question asked, about the return for the city of Memphis, and I've heard that asked a couple of times, what's the reward, for the increased investment? If we are always observing the but-for principle in terms of economic development and the incentives we put in, that, but for this economic incentive that we offer, but for this subsidy we offer, we wouldn't have this project at all. Or at least we wouldn't have the project to the scale that we want it to be. And so as long as that is being observed, the return is the existence of that project and the benefit that project provides to our economy and the community, which you see on page 2 of their PowerPoint in terms of the hotel motel tax it'll provide, the sales tax that it'll provide, the property tax increase that it'll provide, the jobs that it provides to the community and those wages that get paid out, the construction cost that gets provided to the community. Those are the benefits of economic development and incentives. And if these projects were able to go forward without the incentives that we offer, then we are not doing the incentive structure correctly. Then the but-for principle has not been observed. And so it's almost, and I hate to use this term, but it's a bit of a game of chicken. Every time we get into discussions with developers about whether there should be economic incentives for their project, what they need in order to go forward versus what they don't need. Usually that plays out behind the scenes, and it happens much earlier. In this case, we're doing it in a very public forum, in a very public way, and this is a big project that has big implications for I think the future of our downtown. And there have been some twists and some turns in the marketplace, in uncertainty. There's always uncertainty in the market. There's always risk in the market, but I think it is very fair to say that there's probably more of a fear-based uncertainty right now than a confidence-based one, just by the nature of it. So in this game of chicken, for lack of a better term, and right now it seems like it's being played out between the developers and the administration and who's going to turn first, there's also a third player, and it's that marketplace. And as time goes by, they could enter the scene, and everybody in this room, I think, is rooting for this project to go forward and to be successful. We're just trying to figure out the best way to do so. The marketplace doesn't care. And they have the potential, if it changes in the wrong direction, again, to make this more difficult. And I do get nervous as time goes by if we have a bird in the hand and we're able to do this. And it seems to make sense in terms of the equation that we're offering, all those benefits that we're looking at on page 2 versus the risk to the city. And we have to evaluate that risk probably in 3 different ways at least. One is what happens if none of it comes to fruition, and actually everything goes great with the revenues and the projections of this project, and we never have to put $1 in. Would this project be worth it? And we'd all probably be nodding along, and that'd be great. The other is the other extreme, and if there was some sort of cataclysmic event that took the revenue to zero for all time and there was no insurance or recovery for this project and we were on the hook for the rest of it, would it be worth it? And then we have to really look at what's the most likely scenario, because we know we're not going to pay out the full amount. Every dollar of revenue that they bring in lowers the amount that we have to pay in our risk, and they're going to be bringing in revenues over the course of the lifetime of this project. And so that takes off that risk off our books. And in there is kind of the art of it, where we have to determine what's good for the city. This is a transformative project, and I get concerned about the risk also of what happens if we do not build or support development in this community. There was a question asked of what comes next, and I don't have a great answer to that about what comes next if we are not able to have projects like this move forward. That is a real concern. So there are 2 questions that were brought up by Mr. Jones that I would love to have the development team address. I'll get to that in a second. To the administration, Shirley, I think you laid out the 4 to 6 week timeline in terms of confidence. When we went through this process before, again, with the 50% backing, what was the timeline that we followed there? Is it the same? I mean, is it the exact same process? And if we've already gone through that process once, is there any ability for us to truncate that?
Sure, thank you, Councilman Morgan. We did not go through this same process. And we did not ask for a bond rating from our bond ratings to the impact. And so I'll kind of explain why. When we first started looking at this project, and we were looking at a 50% backstop, we were talking about $3.5 million possible, right? 30 years for a total of $161 million. We weighed that against where we were economically and went, okay, the risk, this is the resolution that we brought before you in April, and we spent probably a couple months dealing through that, going through that process. When we weighed that, that seemed to be an acceptable risk. Now, we didn't do that lightly. We talked to our advisors. Doug and I drove to Nashville and met with the comptroller emeritus and his team and said, I know we don't have to ask permission to do this, but what do you all think? And they were okay. They weren't happy about it. They weren't jumping up and down. They were saying, we don't like it, but this seems like an okay risk for where you are. We moved forward. We brought that resolution to you. And that resolution was approved. It was never executed on. We did not have the reserve agreement. Nothing happened, apparently, until Wednesday of last week, when the administration was notified that that 50% backstop was just not going to work and it needed to be 100%. And that's where, I didn't even know about it until this Monday. So immediately we tried to start looking at what does this really look like? Because now you're not talking about a 50% backstop, you're talking about 100% backstop for 30 years. And so I know this has been a lot of information, and you guys have been talking, and all of us have been talking a long time. I just want to remind you, this is one development that we're talking about. This is one bond issuance. We have other bond issuances that we are dealing with, and I know it's easy to laser focus on this, and I understand that, and I appreciate that. But our responsibility to you is to make sure you have the information that we're looking at comprehensively for the city of Memphis, not just this one bond issue. So thank you for that question.
Okay. And along the lines of incentives, I don't know if I've ever seen an incentive that I like. There's certainly many that I've seen that I felt are necessary and are proper and beneficial to the overall economy and health. And if we didn't offer those incentives, I believe we would have less revenue to address many of the problems that we have, and we would have more problems. And the way you can measure it in terms of poverty and pilots is you look at the jobs that these incentives have created or provided for over the years, and just look at their salaries and then just subtract them out of our economy. I mean, it's really easy to measure poverty. We only have two factors. We measure number of dependents in the household and household income. And you can just delete those incomes from the Memphis economy, and you can multiply it out and find out how much higher our poverty rate would probably be. Now, it's always a what-if scenario, but that would be a pretty good way to eyeball it in terms of the impact that these incentives do have on poverty. But I don't want to go down, I guess, that rabbit hole of talking about incentives in general. To the developers, this may be an uncomfortable question, but I'd like to drill down a little bit more on the time pressures that y'all are under, because it feels like we are being placed under time pressures to make this decision, and the administration. You talked about construction could begin on Monday. If it does take a 4 to 6 week process, like the administration has spoken about tonight, what does that do for your construction contracts? What does that mean for your other equity partners who have capital committed to this project? Is there potential where that would let them out of their contracts and have them back out? Another bad metaphor, in the Jenga game that is trying to put these deals together, what are some of the blocks that could get pulled out in the next 4 to 6 weeks that would cause this to collapse, and we run into that lose-lose situation where we don't get this constructed or built?
So and yes, I know sometimes it feels like it's the administration, us, and then Center City Revenue Finance Corporation, and then the council here. What I can tell you is there is an intense desire among all the parties to figure this out. And what I have to have is confidence. And ironically, that's what the mayor is also asking for, is confidence that it doesn't hurt the city. And then we have to both rely on our advisors. What I can tell you from where I am is we literally will have to make a decision with imperfect information on whether or not to proceed based off of what the next 72 to, thankfully today's Thursday, I get the freaking weekend, which we'll be working through. There has to be, in my opinion, some Rubik's Cube combination that unlocks the path forward to yes. I mean, just 10 seconds ago, we were talking about, hey, would this work? I sincerely hope Mayor Strickland can get comfortable that his advisors can get him an answer that they feel confident about that takes less than 4 to 6 weeks. Now, what exactly that looks like today, I don't have, but I know that by passing this resolution and authorizing it allows us the time to continue to have the dialogue to get us to where we need. I'll go back to an earlier state. If we want to amend the resolution and have a funding pledge, as part of it to help fund the debt service and capitalized interest, that is a surefire way to give us breathing room to have something lower. What Mr. Perry said today is the surefire way to make sure this project has enough net proceeds is to 100% guarantee the taxable 5% surcharge, which would get an investment grade rating and could be sold. What we're trying to do is work within the parameters of the previously approved 50-50 and that scenario so that the city doesn't have too high of a contingent liability. And we're just literally mashing that up. I ran this, Jim Perry ran this thing today at, 1250. So that, to answer you, it's when I lose confidence that a deal can be made, we will shut it down. If it's going to take 6 weeks, I have to have confidence that at 6 weeks and 1 day, we're closing. Fortunately, James McLaren and Butler Snow Council and everyone else has prepared in near final draft every single document, because when Mr. Perry says, hey, we were ready to go and close, it was only till he found out from price discovery that these things weren't going to be sold. And that's when we all started to work around the clock to make this deal happen. So authorizing the resolution buys time, and it puts the ball in the mayor's court to make a decision about the risk. Supplementing the resolution with a cash commitment over a 2-year period that would be at the discretion of the mayor to do with the credit rating would be a significant enhancement not to have to go to the full 100%.
Okay. It would be my recommendation to the council that we would authorize the mayor to move forward, and we'd hopefully do so in a way that doesn't require coming back to the city council. I think, there are checks and balances in government, and right now, between the legislature and the executive, and the mayor is working with them. We should be kept in the loop. We should be informed about any decision that the mayor would make on this and how they want to move forward. And if for some reason it is so egregious to this council, the majority will of this council, and I don't think this is going to be the case, that the terms that the mayor has laid out would never be in the interest of the city, and we would never agree to that, we can always do a motion to reconsider. I think, or we could bring it back up in a quick and formal way, but this would be a way for the city council to get out of the way and take out some of the time delay that could occur because of our scheduling. Some of it would help provide a little bit more confidence to the ability of this project to get through by just removing the potential hurdle that this vote could be. So it'd be my recommendation that we authorize and we vote in favor of this resolution. Hopefully the resolution doesn't have to come back in front of us if there are material changes. I'm not sure about that. We can talk to Alan Wade. And that we authorize the mayor to move forward. And again, we're kept in the loop, we're kept informed, and if for some reason it is so outside the parameters of what we have talked about or discussed, then we would have an option to bring it back to us. But I think that would be the quickest way to move forward and still have a measure of balance and oversight. Thank you, Madam Chair.
Thank you very kindly. I see some council members that are in the queue. Prior to yielding to the council members, we have Joe Kent that would like to speak. You've been sitting patiently. If you would please share your name and address for the records.
Joe Kent, 5111 Flamingo. I'm not even trying to help black people, and my taxpayer justice platform serves 127,000 more black people in Memphis than any other race by just not ripping off the taxpayer. This is taxpayer bullying. As a flag of social justice pageantry is waved with this one bill endeavor, helping a few well-heeled minorities participate as equity investors in a luxury hotel does not help the local majority minority population when exposing the taxpayer to greatly increased liability. Next, from a procedural standpoint, none of the public documents discussed on the record by Chief Shirley Ford and requested by me were made available to the public in council documents to help inform the press or public decision-making. It was stated in the Economic Development Committee that this act was locally unprecedented. It's not true. It was preceded by the Electrolux, which was with a much less liability, which is currently being borne by the taxpayer and sits on the EDGE balance sheet. Can someone articulate the total taxpayer subsidies for all the one bill project to include a most likely use of the bond backing contingency, which is $80 million, is the most likely number. That's half of the 161. I have challenged one certain council member to provide such listing, and they have failed to deliver. Is there a revised economic impact study for public review to include a most likely bond replenishment payment? Such an economic impact study would reveal that there is no taxpayer benefit and potentially taxpayer losses for a majority black community in need. This fiscally liberal corporate socialist act should be rejected. Now, with the pilot extension fund and this, $200 million is not flowing into the core city. Just letting you know. Thanks.
Thank you very kindly. Councilwoman Johnson, you may be recognized.
Thank you. I have one quick question, Mr. Carlisle. Mr. Carlisle, please.
Yes, ma'am.
I support what Councilman Jones said in regards to if we have to pay, we should be able to recoup it if the property is sold. Would you have any objections to that?
I think that there's a clarification that needs to be made just to make sure that we're clear. Should the city ever be called upon to fund its debt service replenishment obligation, the project has to repay the city through the other excess funds that the project generates. So there is an obligation to repay the city as it accumulates funds. So if there's a dip, let's say we're at doing well, and then we hit a bump, okay? And it causes $1 million payment. Well, in the future years when there isn't a bump, you have to repay the city. So it is an obligation back to repay the city so that the city is made whole.
Okay, that's already included in the guidelines. Okay.
It was an early protection the city required.
Okay.
Yes, ma'am.
Thank you.
Thank you very kindly. I'm next in the queue, and I've been sitting here very patiently, listening to all of the inquiries. I had someone, a millennial, to call me today. And they said, Councilwoman Swearingen, why isn't Memphis growing like Nashville? Why isn't Memphis growing like Atlanta? As I listen today, one of the answers that I'm going to go back and share with them is because of opportunities. We've got to provide opportunities for our people. Lorraine Motel was once owned by an African American. The Benchmark was once owned by an African American. We're sitting here today, and we've been deliberating over a hotel that has 47 Black investors in a city that's approximately 70% populated with African Americans. What a day. What a day. This is the first project that I have seen of this magnitude that involved this many African Americans, and it makes me so proud. Yes, investments, they're a risk, but you all are willing to take a chance on your hard-earned earnings. Part of being a good leader is sometimes involve believing in the people. We know that you have invested thousands, some of you millions of dollars into this project. You're going to do everything you can to prevent it from failing. If you believe that much in yourself, you could have taken your dollars elsewhere. How is Atlanta growing? Because they have Black people that are investing, and people are believing in them. So they're moving to Atlanta. How is Nashville growing? They have individuals that are investing. And so they moved to Nashville. We want you all to stay in the city of Memphis. We want you to continue to invest in the city of Memphis. And we want you to remain in the city of Memphis. And I applaud you all for even putting up your hard-earned dollars in this city. It's very symbolic that this hotel is in an area that represents great
Black men with street names. G. Patterson, that's on your south end. In the middle, you have Martin Luther King. Then you have B.B. King. And just Saturday, we've got Bobby O.J. Street, African Americans right in the heart of that hotel. Even though the mayor is not ready to sign on today, I would like to show my sincere support and approval for this project, and I thank you for believing in the city of Memphis by investing within our city. Councilman Ford, you may be recognized.
Yeah, well said, but, okay? There's always a but to it, okay? You know, you mentioned some streets it took from 68 to a couple of years ago to get Martin Luther King Street changed. Hello? Bobby O.J. was okay, but he wasn't a Martin Luther King.
No, he wasn't.
He wasn't nowhere near about. Some of these other streets that we name, they are near about. Nowhere when it comes to black folk. I'm black. Later, y'all wasn't even born when the struggle was here, okay? Y'all don't know nothing about 68, okay? Wasn't even thought about and still don't care about, okay? When it comes to the city of Memphis, we got to protect the city of Memphis. Worth, I like what you said, but Chief, I need you to come up here, you and Ms. Ford, okay? We wouldn't even be here today if everybody would have been doing what they're supposed to have been doing. All of a sudden, at the 11th hour, you want to come and change things around, okay? You don't care about money. You got to know. You go invest out there with them for this hotel. If you want to talk about something, get your people. You're Morgan. A few others got money. Go out there and sit with them. If you want it so bad, but you know what? I don't want to put this city of Memphis in problem because everything that everybody out there said, I'm going to lose money here. I'm going to lose money here. This is going to happen, but you didn't give a doggone about the city losing a dime. It ain't no black thing, ain't no white thing. The hotel is a nice project. Nobody should rush. The way I see things, when you rush me, something wrong, because you're rushing me. I own a funeral home. When I have a family say, hey, I need to come in, I need to bury somebody here today and all the rest of the stuff, I got kind of issue because they're rushing. Then they bring me an insurance policy that ain't no damn good. But they want me to put them in the ground because they know I can't go dig them back up. You know what I'm talking about, Canale. Putting somebody in the ground because, hey, you won't get a dime out of it. We may lose, but you know what? Everybody ignored that $5 million that you asked for alone. That's part of it. Everybody be talking about 4-6 weeks. It may not take but 2 weeks. But don't be in no hurry. And if all of these investors, and since y'all came back, it's supposed to have been 50, now you want 100? That changed the name of the game. The 100% that they want is 50. We wouldn't even be here today. Everything was fine. But when you do that, and you know, everybody said, well, you know, all these other folks, they'll get their money out of it, but the city of Memphis will still be stuck. Because they said, you really don't need us, they just need our back. Don't need us. But we're going to be put in the mix, because if something do happen, it's us. And some of us won't be up here. I may not be here, but it'll be put on the city of Memphis. It's going to be hard. And Mr. Carlisle, your group need to get on back up there with this mayor, because if he's not going to sign it, why try to force somebody in there on something, and why try to approve something that just to say we did it? You know, I have a problem with everybody nowadays always, hey, it's always a resolution, I don't know. God dog, please. Let's be for real. You know, we're almost there, but Mr. Carlisle, you need to take that $5 million. Get with your others. Give us a little more time, okay? Just trying to make sure these things happen. I don't see a problem. I see a problem when everybody says something's gonna happen with their money, but don't care about city money. Okay, really don't care about the city. And I don't want to go there, but I got issues when it comes down to hotels now, okay, because they change names every 2, 3, 4 years. Same people get their money out, but hell, who's stuck with the bill? I got issues, you know. Want to know the reason why Memphis hadn't grown like Nashville and Atlanta? Because we got 3, 4, maybe 5 people. If it ain't about them, it ain't gonna happen. That's our problem. You know, Atlanta had to decide it ain't a black thing, it ain't a white thing, it's our thing, and all of us need to get together. And they were a little country hick little town, but they all got together, and it wasn't about a couple of people in Atlanta. Just about everybody. That's how they took off. That's how Nashville took off. But we got only a few. If it's not about them, won't be. We maybe need to get rid of those only few and put these other people in here. Maybe we can grow a little bit larger. And I don't want to have to call these few people's names out. I will, because I ain't scared of them. I'm just being honest with you. I'm not scared of none of these people, because I'm not going to benefit any, but they are. So I ask you, get back with the administration. We're almost there. Good thing that you're going to be doing. Hey, let's get it done. Let's come back in 2 weeks with it. And shucks, I think we'll be ready. And I believe that the mayor upstairs will sign everything. But hey, let's use what we got right now. I'm just asking that. But now y'all can vote any way you want today. I'm not going to vote with this today. I ask my colleagues don't vote with this today. If so, you'll see it down the road. Because you know what? They always talk about us black folks here. We have suffered, but they ain't gave us a dime. We used to own service stations. We used to own everything just about almost in Memphis. We don't own none of it now. I wonder why. And some of us were the reasons why we don't own it no more. Okay? Hello? I'm gonna stop. I appreciate all of y'all, but hey, y'all need to get it together. Get it together. Get it together. Thank y'all. Okay. You know, and I'm
Councilman Ford, you moved, did you move to hold?
I moved to hold this for 2 weeks, give them time, if they can. That's their problem.
Is there a second?
I think it will happen, no. I really and truly think it will happen. Time is an essence. Like I said, we would not be here today if it was 59 or 100. Give us some time. Don't rush it. Never rush. If you were baking the cake, you wouldn't take it out before it dry. Bake through time. There's time for everything.
All right, we have, Councilman Ford has moved to hold this item number 37 for 2 weeks. Vice Chair Jones has seconded. Is there a debate regarding the hold? Councilwoman Robinson, you may be recognized.
Madam Chair, I understand what Councilman Ford wants us to do is to work this out, but I don't think we need to hold the item. We need the item to move to the mayor's desk and staff so they can do their due diligence. So I want to, may I make a substitute motion that we move this item to the mayor's office and staff so that they can do the due diligence and then share that information with us when they get it worked out. We can't kill this plan. This is great for Memphis. We just need them working on it. And if we put it off for 2 weeks, they might take 2 weeks. If we can get it done in 2 days, we want that to happen. I'd like for it to go directly to the mayor's desk so that he and his staff can do their due diligence immediately.
Second.
That's a
see
substitute motion.
this is a debate on the whole.
Okay.
All right. Dr. Warren, did you withdraw your? Okay.
I don't have a problem with sending it there under advisory with everybody and them getting together. It may not take that long. Hey, I have no problem with that. We're not voting on passing this.
So are you withdrawing your hold?
And if so, I withdraw my motion that I have for that to go directly to there. I have no problem with that.
Okay, your motion has been withdrawn. We now have on the table a motion to send this item to the mayor for him to come up with an agreement. Are you requesting for it to return here in 2 weeks?
As soon as possible, whenever they can.
Okay, and Dr. Warren has seconded that motion. Okay, Councilman Morgan, you may be recognized.
Madam Chair, I just want to be real, this could have some significant consequences, so I want to be really clear on the motion. I have not heard of a motion to send something to the mayor's desk. Typically, if we have a resolution, we'll vote it up, we'll vote it down, we'll hold it, we'll amend it. And I don't know if we can send a resolution or to the mayor's desk. How would that not be the same action as a hold?
Hold on 1 second. Attorney Wade, are you online?
Yes, I am.
Okay. We had a motion that has been withdrawn. We now have a substitute motion to send this item to the mayor's desk.
I've heard the discussion. I think the way the resolution is worded, if you approve the resolution, the effect of it is to authorize the mayor to go forward. It will require him to do his due diligence automatically, but you can also add a provision that final review will rest with you if there are any material changes in the structure.
Okay, so are we to vote on this substitute motion? Hold on.
Resolution based on what he just said.
Hold on.
I just withdraw my motion then.
Okay, so we're now back to the original resolution. Okay, I'd like to call for the question.
I want to speak on.
Are you in the queue?
Yes, I am.
Okay. Vice Chair Jones, you may be recognized.
So there was some discussion that, I'm getting noodle brains up in here, but there was some discussion about maybe modifying this particular resolution based upon terms that I think that Mr. Carlisle say would be acceptable. is that's what's on the table that we want the mayor to reconsider, because we have a resolution that came before us. Bam, approve this. Based upon the discussions here, Mr. Carlisle has offered that, well, based upon, as I get it from what Mr. McGowan has said, things can change a little bit. We can go back to the table. So our approval today, are we approving it as presented, or are we approving it based upon what Mr. Carlisle has offered as different terms than what was presented to us originally here today?
I would like,
Councilman Jones.
well, wait a second. I would like for Attorney Wade to respond to his question, and then I will recognize you, Dr. Warren.
Councilman Jones, I think the way this has unfolded, the mayor is not comfortable signing the document based on the present structure. So there will have to be some changes to make him comfortable. So my suggestion is, by approving this, he will have to do his due diligence to say, these are the things I'm comfortable with to go forward. And all we want to know is if there are material changes in the structure that you will have final review and approval of.
Okay.
So I think it's implicit that there are going to be some discussions and there are going to be some changes in the terms. So I think just by moving this to his desk will keep the project going and allow them to continue to have the dialogue. That's my understanding. Now, Doug can weigh in if he wants to, but that's how I view where we are.
Will it ever return to council, Attorney Wade?
Yes, under the amendment that I suggested, that you would add language that says that the council will have final review or if there are any material change in the present structure. So if they negotiate some changes in the structure, then it will come back to you for final review and approval.
Okay, so once we approve it, or if it's approved today, it will then go to the mayor's desk. He will make the necessary changes. That final document will return to the council. Is that correct?
Yes.
Okay, Councilman Warren? I'm sorry.
So based upon that, what we would be approving today, though, is still the 100% backstop. Is that correct, Mr. Wade, as you interpret it and hear it?
Yes.
Okay.
But as I understand it, that's not going anywhere. Whether you approve it or not, it's not going anywhere in its present form, so it's going to have to be modified.
Thank you. Thank you, Madam Chair.
Councilman Warren, have you withdrawn from the queue?
I've withdrawn, yes, ma'am.
Okay, Councilman Covette, you may be recognized.
Okay, thank you, colleagues. For the back and forth, I've learned more in Tuesday about bonds and how this works. I thank you for all your input. I do want to double check one thing, that in this resolution, we do have the important phrase sentence that says it is subject to final review of any material changes in the structure by the Memphis City Council. Is that language in our resolution currently?
No, it's not. It has to be added. It has to be an amendment.
Thank you, Counselor. Then I offer that as a friendly amendment, properly seconded. Is there an objection?
We can add it without objection. Are there any objections?
Outstanding. Then I call the question.
Thank you very kindly. Madam Comptroller, please clear the screen so we may vote on. Councilman Ford, you may be recognized.
Okay, Chief.
Yes, sir.
I know you were up at the podium. Did you have something to really say pertaining to if we pass this today to go to the mayor, but everybody still needs to get together? Other than that, you know, my motion that I had that I end up just dropped it. I don't want to pass something and they think they're doing what they're supposed to do. Okay. And it may not come back to us. I'm having issues. I don't know about y'all, having issues. That's why I'm asking you, if we vote this to go to the mayor's office, I mean, because he's not gonna sign it until everybody get together anyway. And I think we can get there. It's just that he's not gonna sign it, may come back to us, and we're gonna be back here for another 3-4 hours. You know, I'm just being honest, but I don't want to pass this because what our council said, we could have passed this Tuesday. So I need to hear from you.
Yes, sir.
Councilman Ford.
Oh, sorry, go ahead.
Councilman Ford.
I'm here. I'm here.
I think the issue is, if the mayor's not gonna sign it under any circumstances.
I know that.
You're wasting your time. Because you can pass 100 resolutions and nothing gonna go anywhere. So you're operating under the premise that everybody's operating under good faith. So that's what you would do to keep the process going, to keep pressure on them to do what they need to do. That's what I do.
Good enough. Now, I want to hear from you, Chief. I've heard from council. I already knew that.
Yes, sir. So I think it's a practical matter to, I said at the outset, you know, should council pass this, the mayor's not ready to sign it. I also told you during the dialogue that one of the things that we had proposed was a $5 million. I can't do that without your approval, so I have to bring that to you anyway. I also think, to be frank, and Mr. Carlisle's probably going to answer this, if you vote it down, I think he's going to come back and start working on a different approach, perhaps. So I think there's due diligence to be done anyway. I think that the dialogue's not going to be over irrespective of the outcome. We have done a lot of work together to get to this point. We're going to have to continue. As I mentioned at the beginning, Councilman, the door is still open for us to talk. And so, you know, the mayor's a man of his word, so the door is open for us to talk, and we intend to do that.
Thanks. Okay, I don't see anyone else in the queue. Are there any other council members that would like to be recognized? Madam Comptroller, please clear the screen so we may vote on item number 37 as amended with same night minutes, please.
Do we have a motion or a second for this item?
Colvin Warren.
Okay. Thank you.
Electronically.
Thank you.
Thank you very kindly. It's been moved by Councilman Colvett, seconded by Councilman Morgan.
Please cast your votes.
The screens are not clear. Thank you very kindly.
Canali, yes. Colvett, yes. Ford, abstain. Johnson, yes. Jones, no. Morgan, yes. Robinson, yes. Warren, yes. Chairwoman Swearingen, yes.
This item passed. Council members, I would like to declare this meeting in recess. Oh, my goodness. Whoa, whoa, whoa. You may be recognized. Are you jumping up or are you just shouting? I would like to. Hold on. Attorney, we don't need another. Attorney Wade, will we need another same night minute vote?
No, we can have that at the next meeting. They've been moved to the, no, we don't need one.
It was moved to same. Thank you very kindly. So it's been moved to same 9 minutes. This meeting is in recess in case something is worked out before the next council meeting. Have a great day. She jumped.